Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 10th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies that I find on any given day based on those assumptions we come up with, or I come up with, based on the economic data and the geopolitical environment, and therefore my market analysis. So there is a right time and place for each and every option strategy, and I try to delve down into the nitty-gritty on those details in my webinars that you can check out at protraderstrategies.com. We aren't just coming up with an assumption and buying calls on a bullish assumption or buying puts on a bearish assumption. No, we need to find out what the environment is, know what the duration is, and know what the optimal strike location is for each and every option strategy. So please check that out, because it's not just having an assumption and picking a option strategy out of the hat. So please check that out. All right, let's get on with the economic data across the pond. Really not a whole lot to see there. Here in the United States, we got core PPE, which is producer price index, expecting that to move higher with the crude oil moving higher, but we got it actually down. Core PPE or PPI, is negative 0.3%, expected to be a negative or positive 0.1%. So that excludes food and energy. And then we have the regular PPI, which includes food and energy, obviously, but it still was down negative 0.2%, expected to be a positive 0.4%. I think it was expected to be a little bit higher, as we're seeing meat prices go higher. We're also seeing crude oil prices right here moving higher up into that 40 handle. That would expect to increase PPI, but it's not necessarily. There's other factors involved that are drawing that, weighing that index down. All right, crude oil, again, up 58% after settling in the 39 handle yesterday, but it didn't get below that 39.16 area, which is lining up with my 50 Fibonacci, and it is the value area low. So yes, we could expect to see that supported, and we are seeing that. We got below the 9-day moving average. Right now, just bumping up against that 9-day moving average. So once we got below that, that is short-term bearishness. I do expect to see us continue to see some of this bearishness. We are seeing more lockdowns going on. Something I forgot to mention is, everybody was touting how great every other country was doing, and the United States was really falling flat on their face with this corona pandemic, and how we were seeing more spikes throughout the nation. Well, again, across the pond and in other countries, Tokyo, Hong Kong, seeing record infections. Australia is locking down Melbourne again. Even South Korea is struggling to control their outbreaks. So it's not just here in the United States, you guys. It is everywhere. As people try to open up the economy, of course, there is going to be more spread. We can't stay here in our homes the entirety of 2020, or until they find a virus find a cure for the virus. So it's just not going to happen anytime soon. That we do need to open up. I agree that it is something that we are going to have to really try to control, but at the end of the day, we can't continue to have the economy completely shut down. There is all kinds of ancillary problems we're going to be seeing if we continue to do that. We need an economy moving, because if we lower the standard of living, people are going to get sick easier. So we need to open up and just take major precautions, really. All right, crude oil, like I said, in the 40 handle. I don't really expect it to stay there much longer, but the market can stay irrational longer than we can stay solvent. All right, bonds unchanged, but in that 180 handle, a little bit off the highs of the session. And the thing is that's because we're seeing the equities make a rebound. We were seeing them struggle earlier on. So gold is coming off as well with that move of money. One thing I forgot to mention when I was talking about the bonds yesterday, I believe 5-year notes had a record low. So that should continue to cause bonds to move higher as well. Remember, higher bonds, lower interest rate. So the price mechanism is inversely related there. And bonds tried to make that move yesterday, again tested that 180, and that's where I think the sweet spot is. Gold, on the other hand, above the 1800 handle, just holding on to that right now. I was kind of expecting once we've got above this area that we would go up and test that high that was set in 2000 and I believe 11. So that is the all-time high there that we haven't quite made up there. VIX coming off as we are seeing the equities make a move higher here. We see the Dow Jones Industrial Average up 230 points. Now that's not too far out of the realm of what I've been talking about here, you guys. I've been saying that we'll probably see a sector rotation coming relatively soon from some of the tech sector as it's done very well, but then rotating in some of these laggers like the blue chips. But having said that, the NASDAQ is continuing to move higher, up 8 points on the day, not showing any kinks in that armor and looking like it wants to test 10,847, which is part of my Fibonacci extensions there. You can see that would be obviously a new all-time high, but it looks like it wants to go up there and test that area. E-mini S&Ps up 14 points on the day. I was also expecting some of this weakness here in the E-mini S&Ps, some weakness in the NASDAQ. While the Dow Jones started moving, we're not really getting that, but it does feel like we're kind of finding a groove right here in and around this 3100 handle. So E-mini S&P is not making it as big as a move as the rest of the markets, but we are still seeing some strength there across the board. Let's take a look at the breakdown of the E-mini S&Ps. This is a 30-minute chart, 30-minute candles, I should say, on the daily. We can see this is an inside day. I mean, for lack of a more perfect example, you can see that the value area high here for today and the value area low lines up perfectly with yesterday, and the point of control as well lines up perfectly with yesterday's point of control and the previous day. So very tight line there. That's where price is being accepted, at least at this time, for the short term. So that is going to become a strong area that we need to keep an eye on, as it's going to act as a magnet at 31, let's call it 3150, just a ballpark it, or round it anyway. So that is going to be some strength there. Another thing to note, it is a Friday heading into a weekend. People do not generally like to hold on to equities heading into the weekend, especially with flare-ups happening globally. That could put a bit of a panic into the markets heading into the end of the day. Not necessarily a panic, I shouldn't say, but at least some concern that people are going to want to cover some of their positions, and we probably will see some weakness. It's also summer markets, lighter volume. Rush to the Hamptons happens right about now, as people are going to be starting to pack up in New York and head out for the weekend. So keep that in mind going forward. Other than that, I haven't done anything with my portfolio, just kind of sitting on that. Finally, we do need to go over our disclaimer. Keep in mind, we are an educational company. I'm not trying to solicit any of you guys to follow in my footsteps, other than how to implement an option into your portfolio. That is important. Follow those guidelines. Make sure that you are knowing your risk parameters, know what your risk tolerance is, and make sure it is appropriate for you. Those guidelines are very important. I'm trying to make it mechanical so that we can take this emotion out of trading, and therefore you'll be more successful. All right? So if you can't take that, take it easy. Have a great weekend.